Good morning and welcome to today's edition of the London Session Open. Today is March 2nd, March 2nd, 2020. And my name is Alejandro Zambrano. I'm the Global Chief Market Strategist with ATFX. We're going to take a look at the markets. We got some interesting developments over the last few days. Number of cases of coronavirus have skyrocketed in Italy. And also central banks are pledging support to the markets. Latest this morning in the Bank of Japan pumped some, I think, $4.5 billion dollars into their system. And you have as well on Friday the head of the central bank of the US, Mr. Jerome Powell, as well, saying that they were ready to support the economy. But nothing concrete from there, but people think they will cut rates in March, which is when they have the next rate meeting. So we're going to talk about that. But before we start, it's always need to stress that trading financial markets, unfortunately, is high risk, and we may lose all of our invested money. As well, guys, in the chat box here, you're most welcome to send any questions you may have. As well, if you want to follow me on Twitter, that is my Twitter handle. As well, I have my own profile on Investing Cube, where I lead the team, and that is linked to my profile here. I do try to publish some content that is a bit different there than here so you definitely want to check that out. Okay, good. Let's kick off. Let's begin. And we'll begin about the euro. So you may wonder, why is the euro going up? Is it because of all these new cases in the US? Or is it because something else? Well, I still think it's something else. I still think that with interest rates being really low in Europe, people have been borrowing in euros and then they invest this overseas. And that is why the euro is acting like some sort of a safe haven currency. Well, sort of, because what's happening is you borrow money in the euro and then you invest this in the US. Maybe you wanted to buy those nice Tesla stocks that everybody wanted to invest in a few weeks ago. Or maybe you wanted to buy into Apple and you took your euros and you invested that overseas. And now, when that's not really working out, because no one really is going to buy a huge amount of iPhones or a huge amount of cars if they shut down the economy, and we see a repeat of what we saw in China. And that's why people are not hedging their bets, and this is why I think this is going upwards. Now, if you look at it from a big picture perspective, we're still dealing with a downtrend. And the situation is this. We still have quite a significant amount of coronavirus cases in Italy, and that is spreading fast. The Louvre in France, they shut down, not because of cases, but I do think there's already quite a lot of cases in France, in the UK, and in the rest of Europe. It's just that people haven't gotten sick so yet that they actually want to check that out. So the latest reading, I think was for yesterday, it was out. It was for, I'm going to write this down here actually, keeping tabs in a little piece of paper here. So on March 1st, we had 1,750 cases in Italy. And when I started to keep track on this little sheet of paper, that was on the 26th. And if this is correct, there was 322 cases in Italy on Wednesday last week, and now there's 1,750. So let's take a look at some of those. Okay, I know we're deviating quite a lot, but let's do it. Webcam Rome. Yeah, so it's still quite busy here with huge crowds in Rome right now. These are probably tourists. This is in Rome. Let's take a look at what is happening in, let's see if I can find Italy. Let me see here. We don't want the Colosseum, we want the cathedral. Okay, it's a rainy day in Milan right now. Okay, so we're getting some adverts here. Okay, so rainy day, so not a lot of people out in Milan. Milan is a city, the biggest city in that area where they had the epicenter with a lot of the different cases in Italy. Yeah, so because of the rain, we don't really know exactly, but it's still quite a lot of people moving. Long story short, I think what's going to happen here is that I think the governments in Europe, they're probably thinking that let's bite the bullet. Let's not shut down the economy. Let's not shut down the borders. Let's just see how this develops. A few thousand people might die, but we're not going to close down the economy. We're not going to do like the Chinese did and shut down their economy. That could be what's happening now, or they're just a bit naive, which means that they think that, oh, it's just going to blow over. So it's either those two. Of course, they're probably going to opt for the first one. Now, the problem is this. What's going to happen in a month's time from now when we have maybe 10,000 cases in Italy, 5 or 6,000 in France, and a few thousand in London, and a few thousand in Germany? Well, it could be a situation where the populations of these countries say, what are you guys doing? Why don't we close the borders? And why don't we just stay at home and work from home, or don't work at all? And that could be what could happen. So maybe in a few weeks' time, they'll do what we did in China, and then it's going to hurt the economy, because the numbers out of China, let's see if we can check this out. I will go here to the economic calendar, and let's see if I can load the figures from Friday last week. So these are the numbers. These are the important numbers, the PMI figures. So this is the composite. That is the combination of the manufacturing and the service sector in China. And you see here, the reading was at 53 before. The latest reading was at 28.9. Now this data just goes to 2017 in this specific setting. But in other places, so when you have the whole story, I think the whole data, if you go back to 2005, this number is lower than we had during the Great Recession. Now, what's going to happen, the reason for this is because people are quarantined, so they're locked down, they don't have the ability to go to work even if they wanted to, and even sectors of the economy or of the country where there's less virus cases, they still struggle to get production up and going. So this will probably bounce back in 2 months from now or so. When things relax in China, this is probably going to bounce back, and people are going to go back and consume what they did. The challenge here is what's going to happen before we sort of go back to normal levels, maybe in 2 months' time. That is the challenge. And in Italy, for example, the government has said that they're going to give, I think, some support. I think it was tax breaks and some other stuff to companies that lose more than 25% of their income or revenue. So that is something that is happening in Italy, and when that happens, again, of course, the markets could potentially bounce back up again. But the question is this: what's going to happen if we have crazy amount of cases in 1 month's time, and then the population say, "Oh, you silly politicians! You didn't close the borders. Why didn't you do this? Why didn't you do that? Let's close the borders now." And then they close the borders, and we have a situation where you have a situation where you sorry about that, and we have a situation where people effectively the economy gets hurt at that point. Okay, let's take a look at the technicals then. So for the technicals here, the market is just at 110.96. And I think if we take out this level, it's quite clear we're going to go slightly higher. But this is not necessarily the best market to short sell. I wouldn't necessarily go long here, because I think up here the situation could still stabilize at one point. So I think we can go up a bit with no question of a doubt. Like, you have a short-term trend above 109.50, and the market's probably going to try to take out this high, and it'll go maybe to 111.50. And if you're scalping, you know what you're doing, then you can continue to be bullish. And then you can look at 110.34 maybe as short-term support. So things can go up a bit, but I wouldn't get too excited. I think what's going to happen here is just that it's going to turn quite messy. And then at one point, not sure how, but this will roll over and come back down again. All right, this is GBP versus the USD, and we're doing really good here. So I was very skeptical to the setup, but the trend prevailed. The trend continues as well to be bearish. So last week we said, look to sell here. So on the 21st of Feb, we reached that level, which was 129.56. I said this can go down, and it did go down, and slid by about 235 pips. Looking at this market today, you have still that high here, and I think if we do swing back up maybe to 128 at 55 or 129. I think people are going to sell there, and then they're going to attack the 126.21 level. Remember, we're dealing with that triangle breakout, and the market traded below here, went up, but that pattern is still in play, and it has a target of 126.21. As for the dollar yen was a tricky one, because I was not necessarily tricky, but remember on Friday it was just sliding and sliding and sliding, and I said that if you're really confident about the situation, then yeah, maybe you can consider to be bullish from here, and if you're not, you need to be careful. What happened here is that the market slid, traded below support, and before we had some sort of channel to work with, at least now we traded below that level, and because I'm a bit bullish on stocks, I think we can probably go up to 109 eventually, maybe 110, but I don't have a strong view here, and I think realistically between 106.46 and 110.49, I think we're going to trade sideways from here. And if you're really bullish, again, maybe 107, but I think the better option is just to trade stocks at this moment. I'll show you in a minute. I'll show you right now, actually. So let's begin with the Dow. So this is the Dow, and there are certain things here. We talked about these last week as well. So you have your typical drawdown. This is the decline from the very high. And some people are asking, how did I find this? On TradingView, it's called Stealthy 7 Max Drawdown. It's a free one. You can find it on TradingView, I think on Indicators, Public Library, and or you just search maybe. There are two of them. Yeah, it's this one here, okay? When you load it though, you're gonna see it has very many different levels. I just used the bottom one, the black, this one here in black. There's 1, 2, 3, 4, 5, so the fifth one. Anyway, this shows you percentage decline from your very high, and on your typical sort of, actually let's use the S&P, is better. On your typical sort of bad week, bad month, whatever, will decline 6%, 5%. You can see most of the declines are there. And then once in a while, like in 2015 and 2016, the market really gets nervous and it goes down with 14.5%. And then if it really turns bad, it will go down with 20. And beyond that, you need to, you can see here, this is 2009. So then the market sits significantly below support, and that is when people really think we're going to have a recession. I think if it's a situation that they shut down Europe in maybe 1 month's time now because of political pressure, which could happen, then yeah, we're probably going to go lower, might even have a recession. But if they just keep the borders open, people can continue with their business and this blows over, then maybe this is it. I'm not 100% certain, but I can tell you this. I can just tell you what I did. So I actually bought in the Dow, but it could be the same here. So last week, you see here, this candle was a bullish candle. This is an indication of a reversal. Now, profit taking. And now what happens here is that you had all this bad news from China, the very negative numbers and everything. And you remember on the way down, we had a bit of news about the coronavirus, but people were still sort of scratching their heads. Why is it going down? Why is it going down? Well, now is your answer. We received that number. We already knew the number was going to be bad because we mentioned here quite some time, and I've been telling it as well on CNBC how we should be selling the Aussie dollar. But the Aussie dollar is up today. The New Zealand dollar is also up today, and Dow Jones is up, S&P is up. Why? Because the market moves ahead. Or maybe someone leaked it. Maybe someone already knew that it was going to be bad. I think everybody knew that it was going to be bad. We just didn't know how bad it was going to be. So when the market opened, of course, it could have traded much lower. But what happened here is that it gapped down like here and reached the low. And then what effectively this was from a technical point of view, it was just a retest of that candle. But the price never slid below the candle. So technically, this for now at least remains bullish above this low, and we can go up, probably up to maybe like the 200-day moving average, or maybe all the way up to 130.83 as the nerves calm down a bit. Why? Because a lot of the bad news is priced in. On a technical basis, the drawdowns have been excessive, pretty much in line with what we've seen in the past. In fact, this was probably down at the lows. It's just that the candle closed bullishly, so it looks like we're only down at one point with 13. And then you have other stuff like the CNN Fear and Greed Index. Look at this. So the CNN Fear and Greed Index was a rock bottom at 10 now, but it was down, I think, at 4 or something like that on Friday. So at least from a technical point of view here, I think this is a situation where, at least in the short term, you can have a counter rally and we might go up a bit, and that could also stop the euro. And then we'll need to see. I'm effectively long from 22,900, so around the levels. And of course, if it trades substantially low below this level, I'm probably going to give this up. But I think we can go up a bit over the next few days, and then maybe from here potentially sell on a break to as long as trade below 31.88. The alternative, and sorry for flipping back and forward, the alternative is that we take out this low here, take out last week's low, and then we'll trade a little bit lower to maybe the lows here from August of last year, and that is your S&P 500. As for the German DAX as well, this is the Dow. The German DAX, the trend is also bearish here. Here the candle is not looking very encouraging, and I have a suspicion you can probably trade to the next level. So that would be the August low, or here this is the open from August 16. So I'm not very confident here that this is going to work out. So wouldn't really be buying dips here. But is it a good time to sell? No, it's probably not a good time to sell. I think you still need to have a bit of a more of correction. Here it'll remain bearish below 12,807. As for crude oil prices, they're doing really good. So sorry for repeating myself, but you had this big rectangle support here, resistance here. We traded below support, and you might remember I was bullish about 49.21, but on the break to that level we turned bearish. This market stayed with 10% over that period, over a period of 2 days. So it's looking good. Nothing wrong booking profits here, guys. If you did sell here, there's nothing wrong booking half, if not most of it. And I think here fib from the very high to the low gives you these different levels. Let's see if we can have a correction maybe to 48.67 or something like that. So up here, I think that makes sense. Okay, let's talk about gold. Gold is a difficult one. Not technically, but try to explain what actually happened. So you might remember people were buying here, and I said people are probably going to be buying here, and the stop loss would be here below 15.98. So we said look to buy around 16.25, with stop losses at 15.98, around that level. That's what I was looking at. Now what happened here is that no one really knows, but there is this we have this journalist that works for Bloomberg, and he covers these markets, and there's a nice thread here that I retweeted that he produced, and he thinks that what happened is that people have been hedging, they've been hedging their positions via gold. So maybe they've been long stocks, and then at the same time they've been long gold, but then because of the strong slide in the market, they had margin calls. So they needed to take some of their profits they had in gold to pay for those margin calls, to support the margin calls, so they're not being stopped out of their position. So that could be one explanation, and that's at least what he thinks. Because unfortunately, we don't know why everybody's buying and selling. It's impossible to know that unless you would go and ask everyone. So everybody sort of, you call the different brokers, you call the different dealers, you look at the data, and then you try to understand what happened. And that's what he thinks happened. if we look at this today, will things blow over? I don't think so. Um, I still think, at least from a big picture perspective, we're dealing with an uptrend. We were $10 away from reaching that 1,700 level that we talked about. And if you look at this on a daily chart, it's still a bullish market. And what's happening here really is that maybe the market moved up too fast. So this is your 200-day moving average. So for here, for example, the difference between the 200-day moving average and was about $217. So then sometimes the market just needs to catch up. Here the difference was at one point $207. So very, very similar. So I think what's happening here is just that you just need to maybe see this catch up a bit. But as long as you trade above 1534, this is going to be a bullish trend. And that's it. Let's see now if you guys have any questions, see if I can answer them. So Indian stuff says, oh, he removed the message. Good morning to you anyway. Regarding Europe, Maurizio here says, regarding Europe, seems to me that right now politicians are more concerned about the economy than the health of the people, so they're stressing that everything is under control. Also, stimulus measures until are now very weak and insufficient. So Maurizio here is actually based in Italy. It's a gentleman I know since quite a few years, and he's saying this, and I agree. I think they're trying to say everything is under control, and I think the PM of the UK, where I'm based, he said something that the virus might spread a little bit more. It's gonna spread a little bit more. I think it's gonna spread much more. And again, I think what they're doing, and it's the same thing with the World Health Organization. If you look what they are saying, they have a system, and the system is, should we warn everybody and tell people to shut their doors and don't walk out? Well, that needs to be weighed against the impacts on the economy. And I think that is what's happening in Europe right now as well. I think they are looking to say, all right, stay calm, continue your business as usual, and will blow over. And surely it will blow over. I think it will blow over. But what it also means that they're not going to close any borders, and they're going to let people be infected. And that's going to have a negative impact on the elderly populations. That's our mothers and our granddads and parents. So that is obviously not cool. So it's a bit difficult it's not difficult, but I think that is really what's happening. And I think maybe what will happen later, as I said before, is that if one country shuts down, then they're going to shut more and more countries. And that is when we start to have some issues. And then for 2 months, maybe this is going to be closed. And then you're going to have a situation in China where, people get hurt really, really quickly. Where economy slows down quickly. That's what I wanted to say. And I think that is what's happening now. Unless, of course, they want to, that's what I think is going to happen. So we got a question here about Indian stuff. What about the Euro Aussie and the Aussie dollar yen? And what about tomorrow's Aussie dollar news? So I think they're going to cut rates tomorrow. I think that's the plan, right? So let's take a look at the Euro Aussie. So this is the Euro Aussie. So this is some old analysis I did. So in the case of the Euro Aussie, they think they're going to cut rates. And I didn't have time to read up on all the news, but I think what's going to happen is that we're probably going to see maybe some sort of a bearish comments, definitely. Are we going to have a rate cut imminently? Not sure. Maybe. How is this going to affect the currency? You might see a relief rally. And you might say, what? Yeah, you might see a relief rally because it might support their economy a bit. And I can also tell you, just from a purely technical perspective, this is a channel I've been working with for quite some time. And the best idea was to buy here in February 17th. And you can see now we extended way beyond the channel. And there's no doubt that we've been going upwards as well in the Aussie dollar. I've been telling my clients here, I told them to sell here. on January 21st when we were at 106.83, 106, well, sorry, 68.32. The market has slid with some cool 400 pips. Now, if you look at this chart, the trend continues to be bearish. So one can continue to be bearish, and I'm going to continue to be bearish until proven otherwise. But you need to be careful with your long-term view, because this market is both the Aussie dollar versus the USD, and also this market has dropped quite a lot. The Aussie dollar has dropped quite a lot, so I don't necessarily think it's going to influence things hugely. What you can do is that, let's load a clean chart. What you could do is that you could focus, because we're still dealing with an uptrend, so you could focus on something like 68.68. So the trend is still bullish above that level, and I guess if you do want to get in position, then it should be around today's lows, and then you look for something like this, like that. As well, let's see if we can find some classic technical patterns. So when I look at this today, is this a pattern of any kind? Some sort of a wedge. Wedge are not really good to trade though, but it's some sort of a wedge. And then you have the break here, and this gives you a target that still remains unmet, like that. If we look at it from a weekly time frame, let's see if we have anything interesting here. So on a weekly, not sure if this qualifies into a rectangle, maybe. This could potentially qualify as a rectangle. You just need to ignore this here, right? Yeah. Well, it's a double top, break of a double top. That gives you something like this. Gives you a different target altogether, like that. And then we have a target of 109 almost. 109, 189.37. So you have these targets. From a macroeconomic perspective, it does make perfect sense that this can continue to trade upwards. I don't disagree. And if you look at this now, again, in a very short term, the 0.68 level is something to focus on. So as long as you're above that level, this market may continue to go upwards. As for the rate cut or not, it's going to create volatility. And I think though eventually this is probably going to try to correct a bit. So, but you can still focus on 68 if you want to. If you bought a long time ago, I would look to scale out. We're gonna do one final thing before we're gonna wrap things up. So this is one of my channels. This one had to be changed because last time the price just went straight up here. But I think I used this channel in the Q1 report, and in the Q1 report it's been spot on. Euro went down, Aussie dollar went down, dollar yen did not work out, and then we covered something else. But what you're looking at here, if you look at this from a channel perspective, we just reached the lower boundary here, and the market reacted by bouncing. And if you look at the daily RSI, you got a double bottom in the RSI here. You will have a double bottom because they can't go below 100. It can't go below 0, so that's why you have yourself a double bottom. I'm laughing, but yeah, it's a double bottom. And so this, I think, is profit taking time. Again, you see that low here, you look what happened in the stock markets. So you look what happened in gold at very elevated levels. So can't try it higher. This one is bottoming out. At the same time, you're seeing the stock markets bottoming out. Now, sometimes what happens is that you don't necessarily have to have a strong surge. sometimes what happens is that just goes up and then it just trades sideways. And if you trade sideways, well, the channel continues to go lower. The moving average catches up with price. So you can do that. So it's not always a great idea to buy at lows. And I would not be buying the low in any currencies. So that is what I would do. Okay, we need to wrap things up. You can see here people are calling me as well. So I'll see you guys tomorrow. Let's just see if there's any quick questions. Can't even remove that. Let me see here. About the Aussie dollar yen. Okay, so I got a question about the Aussie dollar yen as well. Let's take a look about the Aussie dollar yen. Okay, so Aussie dollar yen. I think we had like a wedge breakout, which was like that. Or channel. That target we reached. We need to take a look at this from a bigger picture perspective. Okay, this is quite interesting. So this is the massive head and shoulders. Big head, big left, big right shoulder. The difference between head and neckline is 2,900 points. So that's your target. This could also make sense because of Brexit. Negotiations are starting between the EU and the UK, and it's quite clear from the get-go that the EU wants the UK to remain very, very closely aligned, and it doesn't seem that they're going to be giving them Canada-style trade deal. So that could also be influencing things. You got similar patterns as well in other markets, like the GBP USD. So that could be something. Now, if you look at this in the very short term, it's a bit oversold. If you take a fib from the very high to the very low, then you might have a bit of a correction. And you're looking maybe at maybe say 50% correction or something. The alternative is that we do like this. So again, either it goes down, the alternative it goes like this. All right, and then you have support, then you have resistance, and when we break the channel, that's when you can go bearish. So you have that, or just the selling from that little spot. And that is the Aussie dollar yen. Okay, we're gonna wrap things up, guys. Thanks so much for watching. I hope you have a great day, and be careful out there. Do please take care of yourself as well, especially your elderly. I think that's the problem. The elderly, that's the issue. It's not necessarily if you're younger than 60, you'll be okay. It's if you're older than 60. All right, guys, have a great day, and I'll see you guys tomorrow. Don't forget to like the video, and more importantly, don't forget to share it. Share it on Twitter, Facebook, whatever you are on at. It's really important. If you like it, then please share it, because that gives me more people watching it, and if more people watch it, tells me I'm doing something right. If less people are watching, then tells me that's something I'm doing wrong. And I do produce articles as well, and some articles get very widespread. So obviously maybe I'll do more articles instead of doing more videos. So it's really important you support. Okay, guys, have a great day. See you guys tomorrow. Thank you.